Hello, everybody. That's right, Eagles, Super Bowl champions. Yeah, it's good to be back. Today's Friday, February 21st, 2025. Champions. Yeah, a lot happened. Went to the parade, had Jalen light up his victory cigar in front of me and my son. Awesome time. He wasn't having a good time. My son, there was a lot of noise, a lot for me. And, it's not his memory yet. It's mine. So that was cool. It was awesome time. And then the whole family, the whole house got sick about 2 times over. And I wasn't able to do videos, but I did not want to miss a weekly recap. And today was actually a pretty interesting day. So I will genuinely have to remember if I know how to do this. I am doing quite a bit better, but it was not very fun besides the Eagles around the house. A lot of coughing, a lot of that kind of a thing. So it looks like the market has a little bit of a cold. Let's see. To be honest with you, it's done pretty much exactly what we said it was going to do. We'll get to the charts in a second, but pretty much exactly what's happened from what we said in our last video about a little bit more than a week ago before I fell ill. Here we go. So let me screen. So that's kind of the picture for it here. Today, airlines were really down hard. I'll show you the daily recap first here. So industrials, they hit the Dow really hard. Obviously, you saw UNH, United Healthcare was a big part of that from their, their investigation. Airlines, I'm long JETS. And that has been a bad day for that group. The airlines group and small caps, IWM got absolutely hammered today, down nearly 3%. We'll take a look at all those charts. But yeah, those names I just mentioned were all down by at least 2%. Just decimated, kind of like the Eagles took care of the Chiefs. I'm not even going to start to talk about the game here because it'll just go into like a 40-minute worship of Jalen Hurts, and I couldn't be more proud of the effort. It was an awesome time. I don't mean to get distracted here because the show will run long. We got a lot of charts to get to. If you want to talk Eagles, we can do that on the side anytime. Volatility came alive today, up 7%, depending on what ETF or track you're looking at. I looked at VXX, up 7% today, and Dollar VIX as well. And bonds were really nice and bid here, of course. Bonds price higher, drop in rates. The market does have a little bit of a tariff scare. We'll take a look at that chart. And then really for the week, of course, Monday we had off because of President's Day, but the week recap was a 15% increase in nat gas. We talked about there's a room in your position, room in your portfolio to take a position in nat gas. And to be very honest with you, we'll look at the chart. You didn't have to stay in it for a year and grind it out to 52-week lows and all that. This whole trade was honestly a month-and-a-half trade. We'll take a look at it. It was something like that from 17 to about 25. You didn't really have to. It was just nice and easy. And now we'll see where it goes next. Again, new 52-week highs, as I said here in nat gas. We called it. We wrote about it in the New Year's chart advisor letter and Vamush. And then really on the losses side, the uranium and ARK had 7 to 10% losses. ARK has really come down hard this week. I'm long Tesla and choking on that, and that's a big holder of ARK. So that's emblematic of that. And uranium, we'll take a look at that. Uranium miners are actually making 52-week lows. The uranium chart ugly this week, down 7%. And the SPY gave back 1.5% this week. So not a great week. It is still up about 2.5% on the year, though. IWM has slipped to negative on the year. What a dog. All right, so real fast, I'm going to go on the intraday chart. Probably help if I share a screen. I'll let you look at that beauty. Just packages showing up at the house literally every day. Just buying different Eagle stuff. And as Jalen said, the end ain't coming anytime soon. All right, so ugly trading today. So here is the full day chart. Ugly trading in above average volume. So I think you guys can see that. So we peaked pre-market. And I thought that's the black line is a 200 bar moving average. So it goes back, quite a ways here. I have each bar representing 30 minutes. I thought it was going to hold a little bit or be at least kind of a magnet. That line, that black line that I'm talking about of importance is 608. We just cascaded lower and lower and lower. And really, the sell-off really started to happen at noon. The sell-off took you pretty much nonstop, just sells from 607 SPY all the way to 600 essentially. So you lost 1% over the course of just 2 hours, and the bottom still wasn't yet to come. It came finally at 3:30, and just a small, I don't even want to call this a rally. So people didn't want to hold risk into the weekend. Who knows, maybe, more tariff news, 25% here and there, but it is starting to affect parts of the market. Retail got absolutely hammered, and some superstars in the retail space are really on the lows here. I used to be long and a big advocate of Abercrombie and Fitch, Abercrombie is now hitting 52-week lows. You got to be careful. Unfortunately, the wealth inequality gap is not going away. You want to focus on those companies that can charge up, and the folks that are still going to, concerts and spending money on luxury bags. Those are the stocks you want to own, and stuff like, Big Lots, TJ Maxx, not so much. Actually, I'm not sure about TJ Maxx. I think it's Kohl's. One of them is a dog. But anyway, so that is the intraday chart. VWAP was 603, and we weren't, for the most part, close to that. As I zoom out, real fast in terms of the intraday movers, NVIDIA down 4%. That's not great. Tesla, what a dog this has been, down 4.7%. Yikes. The time to have gotten into that was, kind of before the inauguration, and then getting out of it end of December. That was the trade, of course, in hindsight. NASDAQ got shellacked today. All the indices, we'll look at the charts soon. And then I just want to look at big movers, like I said, about United Healthcare down 7% there. Super Micro down 5%. MicroStrategy down 7%. Coinbase has been really a disappointment. I know a couple traders in this one, and it's I think it's getting ready to go. I think it's we'll say. I think it's picked up a little bit of correlation to Bitcoin, which has also stalled a little bit and gave back today. So as I zoom out here, so again, if you recall what I said before, the SPY was in an accumulation phase based on its 15-day cycle that ends on or around February 25th. And I said all along, I think it's going to be a real challenge to see SPY close above 610. I want to see what it's going to do and how it's going to get there. So what it's done, really, so the first time it did it was right around the 13th, about a week ago, right after we honestly stopped saying that, or when we said that. And then finally yesterday, or 2 days ago, was the big kahuna. We closed at 613. And so now what? I still think we make a move. We try to make a move towards that 610. Towards middle of next week. Today was a pretty hardy flush out. I still think we try to make a move towards 610. That'll still be the line, and I think that'll be as good as it gets. And then you will have a mean reversion give back to about this 605 level. In terms of levels, again, your 200-day moving average is 569 here. All right, a level first reached in end of September. And to be frank, I think the next sell-off will take you to about, I think you have pretty good support here at about, this 597 mark or so. I'm sorry, about 595 mark. So still pretty good support here. I still a little bit more choppy trading, range bound. Essentially, nothing has really changed from where we were, between the January lows and the all-time high 2 days ago. So that's pretty much it. Again, pick your spots. I think we have a little bit more bullishness today. It was probably a nice flush out down 1.7%. They came for the indices. We'll take a look at exactly what areas they really came for. But again, 610 is going to be a resistance for this SPY for quite a bit. All right, let's get into some charts of some stuff that really moved today, and it'll give a little bit more insight into what we expect going forward. So volatility has picked up. We've been, looking for what equates with new all-time highs, should equate mostly with new 52-week lows, at least in VXX. But VXX is not getting the message. Again, the 52-week lows for VXX is all the way back here now in July at 40 even. We're at 44, so within 10%. Today was up 7%. So what do we see here? Again, should be the opposite of my SPY forecast. Essentially, I think this is going to I changed back what I said. I mean, this is going to hold, 38, 39 bucks. I'm not calling for that new 52-week low yet in VXX. There are mechanisms of, dynamics of this as well in terms of the borrow. So I've been calling for the new lows in this, but it just hasn't seemed to come. I do think 39 will hold. I think this will base around 43. And in the next 2-3 weeks, when you have a sell-off, like I said, that 595 level in SPY, this will make a pop to 45, 47 region. It's going to try and make a grab at this 200-day moving average, and then start to go back lower towards that 43 area. All right. So, but VXX today, they came for it up 7%. All right. Obviously, that's with the indices down hard. Another area, there wasn't a ton that was up today. Bonds, TLT was up 1.1%. We haven't looked at a chart of TLT in a while. This is the metric that we're looking at. So this is the 20 plus, the longer, medium part of the curve. Not quite 30 year, obviously. 20 is less than 30. This got a nice bit today. I think this is going to, I think this is a good buy at 88. Understand what I say here in terms of short-term tactical trading for the next 2 weeks or so. I do think this looks to go higher. I think 88 is a good entry, but again, the target is about 91. Again, this is TLT, a bond, so it doesn't move like we're looking at the super micro strategy. And again, ultimate, very heavy resistance at this 92.5 level. We haven't been there since 2 weeks before the Fed cut in December. So that's a very, a high level. I don't think it's going to happen. So again, for the next 2 weeks, it seems like this is going to try and make a rally, make a run towards 91, and that would mean prices of TLT and bonds higher, rates go lower. Typically, that means the market goes higher. I think that'll be a little bit of the tailwind that takes us into middle, possibly even as late as late as next week. We'll see. Something we cannot ignore is KWEB. There's been a lot. We've been talking about China. You got to own it. KWEB up 3% today. You can look at this chart. Just an oopsie here. This basically beginning of the year, it was a sham. Those folks said, as January goes, so does the year. No, not quite. They just had a bad 2.5 weeks essentially. They just basically, they just ran into like the Eagles defense. But yeah, these guys had like a bad 2.5 weeks and then right back. It's not yet at 52-week highs. That was still when the stimulus was announced October 7th at 39, but this is very close. Just $3 or so away. Now what? I personally still want to get into FXI. I bought financials, full disclosure, yesterday. It's another area I wanted to be getting into, so I'm happy I was. Really, to be totally, happy with the portfolio. My last big entry I want to get to is the gold miners, which we'll talk about, and China. And then I'm really happy with what it is overall, essentially, in terms of the duration of the trends I'm exposed to as well. So this right here, obviously, superstar, nice rising trend moving average. This thing really. In end of September, you want it to be in it. Essentially, you've been getting paid in it. January, again, this was ugly here when you got oversold. January 10th, this was really as ugly as it gets. Congrats if you were able to just grab your balls and hold on, and you took this support and basically you took that opening gap when the stimulus was announced and let it fill. And that's a great way of using technical analysis in different forms. The quantitative, looking at it oversold, seeing a rising 200-day moving average, and then getting in. I love when that happens and you actually do it in real time, of course. It's a different thing. So this right here, I don't want to chase it right here. It's had an extraordinary run. I would love to get into this around 33 even. It is a volatile group. Maybe if they gobble, some U.S. stocks, there's less of a bias, an international led by China. We'll see. Some of these stocks in the KWEB, Baidu and Baba, some have had absolutely enormous moves. So we'll see. I would like to get this, potentially a discount. I kind of don't want to pay more than 33.5 on this though. So KWEB, again, you'd have to take like 2-3 weeks to find the opportunity. But KWEB, again, the day gainers was volatility, bonds, and Chinese internet. That's what they bought today. So if you were in those, congrats, you made money on the long side. From the downside, there are some areas that got absolutely hammered. Let's look at the key in terms of volatility adjusted, sigma standard deviation move. XLI led the pack down 2.2%. As you can tell by the size of the bars, that is not customary in XLI. Okay, this is I'll give you the ATR, average true range on this, and it's $134 stock. The average true range is $1.59. Okay, so that's like an ARK, so on a $40 stock. So anyway, so obviously, just the easy thing is if this gets the 200 moving average, obviously that's a great entry. If you still want to be long this name, obviously very sensitive to tariffs and everything that Trump is talking about. If you get in at 132, I think it's decent. I don't love this area though, obviously with everything that's going on. And it overall had a nice rally from mid-January, like the move from 130 all the way to 142 was a nice, 2-week move, and now it was basing and now starting to get back. Don't love the sentiment. I do think this 134, 135 level should hold. I don't think you'll get that much of a discount. Get this at 132, and then afterwards, any kind of relief, maybe cuts the tariffs in half, or they kick it 2 months or something like that. This should pop to its 21-day exponential moving average of 138. So risk reward, don't love it, to be honest, on a $135 stock with low vol, a $3 increase. But I do think I would stay away from this area for the next 2 weeks. And they really started to sell it today. A name I care a bit more in as I'm in it. I've recommended it many times. One of the stars of the past year. Look at this chart, a beauty. Airlines. This has peaked on January 22nd at 27. It's been doing all right. And then today, a monster move lower, down 4%. I woke up to in my portfolio and I said, oy vey, she ugly. and she was ugly indeed. Here's the I guess the not so bad news. It might be choppy for the next 1-2 weeks. Don't love it, but I do think around 24. Honestly, I'm looking at a technical level right around 24.60 should hold. So I think today, don't love that candle. It did close right near the lows. There could be more selling. Then again, the whole market basically closed near the lows today. But I do like the support right around this area. There could be a little bit more ugliness down to about 24 even, but I don't believe so. And I still like the group a lot, and I still think this gets to 26. You got to be patient, but I'm calling for more so mid to late March. I do think this gets back to where my cursor is around 26. Maybe not quite new 52-week highs at 27, but I do think they rebound and get to 26. You're going to have to be patient, though. And I'm still in it. And again, they came for another index. We had XLI. The Dow was also a multiple sigma mover, obviously due to the weird way it's priced. United Healthcare and Goldman had a huge effect on that. So look at this. Picture perfect right to the 200 moving average IWM. Although it's been pretty much a loser. This thing peaked Thanksgiving week at 245. The chart basically has Dikembe Mutombo, rest in peace. But basically, this has a wall of resistance at 230. It gets above ever since the Fed caught on the 18th. This thing gets to 230, and then it goes right back down. If you're lucky, it ping pongs all the way to the 200 moving average. You can buy, and then it does a little bit of basing right around 225. I mean, that's kind of been the playbook. I don't really like this chart. Typically, rising moving averages. If it still has momentum, you do want to buy it at the 200-day. The ugly thing here is it hasn't really been good looking here. It's been mostly, obviously, a mixed bag above the 50 RSI and below, but not really a strong profile. To be frank, I do think this holds this level. I think your risk is minimal around this 218 level at the 200-day moving average. And I do think this gets to 226, just as I said, over the next 2 to 3 weeks. Again, that's about a $9 move, 4% or so. So small caps, you're going to have to be a little bit patient, but I do think this area, I've been telling you some areas that look good and some areas that do not look good. So industrials I'd avoid for the next 2 weeks or so. And then, like I said, small caps look like, I think this is very low risk to reward here. I like that. But today they got shellacked. Okay, let's do some weekly recaps. Some really impressive. This is always gets so fun. Nat gas, number one this week, up 15% to new 52-week highs today, an average of almost 3% a day. Today was up 1.7% or so. What do you do here? Well, first of all, what I want to say was the whole trade really, I mean, you didn't have to stay in it this entire time, obviously, from June and be like, oh, it's going to come back, it's going to come back. Really, right when you start to have, this was a lot of sustained trading over 50 RSI. You could tell there's a little bit of a change here. And then really, if you want to give it in the bag, I mean, the really easier thing is when we start to talk about it, again, that Chart Advisor New Year's week letter, the reason was because I said this 200 moving average is probably going to start to flatten, and then you're going to have higher highs. That's exactly what happened. I said, we talked about the Fibonacci retracement. I said, if you go on the 1 year, 50% Fibonacci retracement, and this is when the stock was still at $16, $17. I said, you're still talking about a 21, I think I said actually $22 target, and we have eclipsed that, and we got to 23 essentially yesterday. So now what I do not want to chase, this is super volatile. Nat gas giveth and it taketh away. This thing's been obviously, oops, let me move that box. This thing has been absolutely red hot. Especially since the new year. You always have to look out for rotation into underpositioned assets. I would give us 1, 2, 3 weeks. Look at the candles, and yes, sometimes they give much more higher highs, but I see a little bit of a bearish divergence here. Here is the highest RSI, and we don't have the higher price, which was today. So I see a little bit of a divergence there. Tells me that there could be give back. Would personally love to get in this one, if you don't have a position around 19 even, I don't think is that horrible. You're probably going to overpay a little bit. Getting around maybe 1875, something like that would be a good position. But right here, full target to me is 21, so I don't like chasing it here. But nat gas, absolutely fire week, the best asset this week, up 15% to a new 52-week high today. Not so many things you can say that about today. Next, all the way back in terms of percentage performance, you have nat gas up 15. Next is FXI up 6%, or almost an average of 1 and change a day. This one trying to eke towards the 52-week high, which was on October 7th at 37.5. It's $1 and 20 cents away. A very strong week, as I said. just up and away. Overbought is the conditions for the last week. I'm not chasing here. Like I said, China's the last, or one of the last areas I want to get in my portfolio. It's obviously having a relative strength breakout. I personally will not chase right here. I'm personally still going to, you're going to have to really be patient, and you might have missed it, but I'm not so sure. I'm going to try and get into this one around 33, around 33 half. So, and I'm going to have to be patient. This is probably going to take like 2 weeks or so. And hopefully we get in around there. And there is support. I don't think that specifically that level, because I think you can tell why my cursor. It was the highs back here in November. It is an important level in FXI, also in December. And then it was the lows just this past week. So we'll see what happens at that 33 half level. We'll see if it gets filled. But like I said, that's like 10% away from here. This thing's been on a tear. Next one, I'm not going to repeat the chart though, because we opened it. So again, nat gas up 50% this week, and then FXI up 6. The next one was volatility up 5. So that lets me know which way the market has gone overall. That tells me it's a fearful week, overall down week, and the S&P actually did lose 1.5% this week, which if you annualize is quite horrendous. That's 6 times 12, 72% year to the downside. So not too fun. And to the upside, like I said, it was kind of weird things like nat gas, 52-week high though, and China, which is on the cusp of 52-week high. You got to be aware of when these new rotations, this isn't just flavor of the month. Now these trends have been in place for quite a while. They're hitting 52-week highs or very nearly that. So they're not, fads. You want to include them in your portfolio. Take a breath. Okay. All right. I think they gave me a prescription for an inhaler. I should probably be using after this, right? Rocco? No? All right. And then the top 3 losers of the past 5 days. Uranium, I know it's not a major market cap thing, but this thing really had an ugly week out of all the selling. Look at this 200-day moving average. Again, strong Dikembe line. The actual figure is 29 even. Uranium down 10% over the past 5 days, or an average of 2%. But today, more than that, down 4%. Like I said, the uranium miners are hitting 52-week lows. Typically, that's kind of a sign for the actual asset. Do we think it's going to happen here? I think this continues to not be in favor for the next week, 2 weeks, to about 26 even. I don't think that 52-week lows get taken out right away, which is at 23. It was at that level back in August. During Yen-Mageddon, actually, is when it hit those levels. But all I see for this one really is trading lower to about 26, where my cursor is. So essentially, not below those September lows, and then, or September highs rather, and then, rallies for this optimistically in the next month or so probably take you to about 28 even. I don't think it makes a run at this 200-day moving average at 29, and this probably just does a lot of nothing and moves lower. Again, the high for this group came in October. I remember being at a conference saying, I can't short uranium. Uranium's a superstar. And I was, a buyer for the most part up until here. Really, when the Fed cut, a lot of things kind of rotate out of investors in terms of rates, dollar hold valuations, and how different assets trade. And again, this one having oversold marks, not a good metric, obviously. And then again, new lows today put in all the way from September. I do think they hold, but 10 US, and like I said, uranium, not a good week. Next, so ARK down 7% this week. This was the second worst area to be in after uranium. So if you were an ARK, tough. However, from trees don't go to the sky, this thing had been a superstar all the way till just this week, going to $68, and just like that, so quickly, just like that, truly in 3 days, from 68 to 60. So more than a 10% drop in just very, very fast time. Like I said, Tesla's a major holder in this. So a couple things. It's a messy chart, just given the velocity and how much it rose to highs, and then you go all the way to essentially, your lower band in 3 days. So now what? I think this one bases around 63. I think this one may have given up a little bit too much too fast. I think you have, with the market, like we said, rates continue to potentially decline, next week. SPY has a little bit of a bid. And I think this may start to pop back up and folks start to gobble this. Overall, great looking chart. Yen-Mageddon treated it really ugly here, and then really it didn't rebound, I wouldn't say with any gusto, until about Halloween week, and then really with the election, ARK and Trump, you could check in the first administration, one of the best ETFs. I think actually the best performing ETF under Trump those first 4 years, and it's been really just a rocket ship from 46 to 66 from election day to this week. and then a little bit of give back. So again, trees are going to the sky. I think it bases around 63. If things continue to sell off and this gets ugly for the group, the support's at 58. So I don't think this one falls all the way out. I do expect these January lows to hold. Like I said, bounces will take you to 63, and then ultimately, I'm still looking for more March to reclaim the $68 level and put in new highs. All right, and then the last one for the week of items that assets that got taken out back, IGV. So the North American, if you were in tech and software, not a fun week, down 5.5%. Today was ugly, down 3.5%. Looks kind of similar to the ARK chart, except the 52-week highs was not this week. These guys peaked back in December 9th, back at 111 essentially. Now we're at 100 overall. Look at the chart. Obviously, it's a superstar group. Great looking chart. Obviously correlated with tech, but don't like the name here. I don't think this had a great run, especially from these lows. Take a look at that from January 13th, $95 all the way to 107. With relatively, not too many aggressive corrections. Now you got one. I think this continues to at least hold around 99. I don't think I think your risk reward here, if you get around 99, is nice. It's pretty strong in my opinion. And Rich, I think bounces will take you to 105, but I think you're going to have to be patient. I don't think those come till about mid to late March. I think this is going to be a tired group for a little bit, again with the floor at 99 and then basing around 105 and ultimate targets back in later March to be around 110. I still think it'll be under these 52-week highs. All right, and top three absolute trades of the past 52 weeks, super important, totally not a fad. These things have to be in your portfolio, in my opinion. These are the absolute best ETFs from the past 52 weeks, so February 21st, 2024 through today. Number one is IBIT, up 86%. A lot of people, looking at crypto. What's going on? It's still trading 95K or so. Bitcoin, what's going on? IBIT, listen, is the absolute superstar from last year. I think this is getting ready to go very soon. I mean, obviously it wasn't today. It was down 3.8%. I think crypto is getting ready to go. I think so in terms of the chart here. Again, IBIT peaked December 17th, the day before the Fed, I believe that was, and it was at $62 essentially. We're looking at the stock here. And now we are at $54. If you could buy this around 51, I love your risk reward, obviously. I think that's going to hold. That to me would be an amazing basis. I think rallies here easily will get you to 56. So that's not saying a lot. That's at $2. That's reclaiming the 3.8 or 4%. Excuse me, we lost today. My target still in the next 2 to 3 weeks on this is $62. So here is my target. That is a new, forecasting new all-time highs for Bitcoin, which would take it past 110. The charts, usually when I'm not led astray, when I just look at the charts, I'm usually led the right way. I own Bitcoin in several accounts. It's like exaggerations of my demise have been greatly exaggerated, right? This thing's a 95K, right? So it's within 15K or, what is that, 15% of new all-time highs. You got to give it the win to its back. That's Saquon. That's them controlling him in the Super Bowl, and no team can do anything to him every other game. And like the rest of the offense, 8. So essentially what I'm saying is I think this is a great level. I think this could easily pop. I want to see how it trades this weekend because obviously an ugly close today. I think this pops to 56, pretty soon. I would think it happens next week, to be frank. Like I said, I think this goes to 62 or new all-time highs. By mid-March. All right. So there you go. I think there's an animal spirits going to come to the market. You wouldn't think it today, but again, market's been on a tear, new all-time highs 2 days ago. So again, trees on ground this guy. Almost named the show that. IBIT is the number one trade of the past year, up 86%. What more do you want? Number two, I'm just going to put the chart on for the the gravitas to say that this is not just a whim. FXI is number 2, what they call uninvestable and all this mess. I set up myself, to be honest, because who knows what they're reporting and all this funny business. Charts are charts. Number 2, it's Bitcoin, it's China. Just this is where the investor dollars are going in the past year time frame. And this chart does not look horrible. Again, one of the big things that people had said in 2024 2024 and even 2023, I believe, was that FXI really never got oversold. So really never that term uninvestable. Maybe, when you don't have the domestic bias for like us folks here. Yeah, because we're, addicted to NVIDIA gaining market cap, from being a video game company over 15 years to being one of the largest inclusions on the S&P. So we ignore things like this. But FXI right here, up 54% year over year. You'd have to be a fool, not to take a serious look at this. And the chart looks great, and it's holding where it is, where it needs to. Amazing if you got a $29. These were steals. This looks like the needle in Seattle if you got it on that on January 22nd. But that was your last chance to get things on sale. Again, I'm going to hopefully try to see if it gets at 33.5, and then catch the train to the next station. And the next one's the next one I want to include in my portfolio, and you should as well. GDX, just a hair behind. It is up 52%. This group peaked in October at 44 even. Also, up 52%. Gold itself is very close, but GDX has a little bit more of outperformance from year over year. It's very close though, GLD. And this was ugly from December 17th when the Fed cut all the way through January 17th. That whole month, you got discounts, you got fear, you got not a lot of confidence here. But the 200-day moving average was still rising. That would have been a decent entry. And again, it overcame and it reclaimed its overbought positions here, as you can see here in RSI. So just the last thing on this, because I am in line to buy this as well. So in terms of, I said I've been getting ready to go. FXI, I'm waiting for a pullback. GDX, I think you might be surprised, but I think this is, I've been waiting this out a little bit. I'm not going to chase it up here, but I do think the entry is getting close. And to be frank, my level is right around like 40 even, or 40, 20, right around there. So we're getting really, really close. And you know what? We're going to, I'm going to write it here, buy GDX. I might have it, just coincide with when the market, we believe, peaks at the accumulation date, because that's what I'm seeing here too for the end of its distribution date, right around, or I have February 28th rather. So I wrote February 28th, take a look at GDX and hopefully buy around $40.20. That's what I'm going to do. And that's actually next Friday, the 28th. So I'll take a look at this at the end of next week, and maybe we'll talk about it and see if we got in. But really, best three gainers of the entire past year. It's Bitcoin, it's China, it's gold miners. Okay, and then teasers behind that, like what else is coming down the rung. I had looked at this before. Just as interesting to know, like what else can I have my portfolio in? Like I said, gold itself is a very strong area. After that, we talk about Chinese internet, silver is coming down the pike. And then after that, you do have to give up some returns. Now it's lesser. But nat gas is up there in terms of one of the best returns of the year. Of course, XLC due to Meta and its crazy rise. Usually don't do this, but it's been a while and there's been a lot of rotation. Utilities is a bright spot. Of course, growth, that is still a staple from last year. Financials, which I bought yesterday, regional banks, ARK, large cap growth, the semiconductors, like I said, capital growth. These are still the areas that you want to be in. And what the hey, since we're looking at the shorts, I just realized it's still on the gold miner screen, but whatever. I have a nice voice, you can listen. Again, to the downside, yeah, I'm almost done, so I'm not going to even flip it. Brazil still been a weak spot. Volatility overall, but there's not a lot of weak spots. Mexico still bad, so parts of LATAM, of course. Solar still has not absolutely resurrected, and that's got small cap areas do look bad. Parts the Ethereum ETF as well, and then ARKK, some biotechs, and that's about it. All right, so this was a lot of fun. We will be back next week with hopefully more regular videos. Have a great weekend. Peace.